On April 1st, the spread between 2-year and 10-year U.S. Treasury yields printed negative 7 basis points. Now, the significance of this is that many analysts believe in the predictive power of that metric and that it was potentially flashing recession concerns. Now, in the weeks that followed, that spread steepened back out to a positive 40 basis points pretty quick due to inflation concerns and the unwinding of some market positions. However, on April 18th, the spread began to flatten again, fueled by some hawkish comments from the Federal Reserve, including Jay Powell press conference, in which he mentioned the name of Paul Volcker and said that a 75 basis point hike was not off the table. Now, this caused a disproportionate rate rise in the short end, while the 10-year underperformed, bringing the 2-year versus 10-year to a current level around 21 basis points. This flattening comes at a time when lockdowns in China are ramping up, causing some recessionary concerns and potential for adding to inflation through supply chain disruptions. Now, if a trader believes that the recent flattening will continue and that the curve could potentially invert again, they could express that opinion by selling the April CME micro 10-year Treasury yield futures contract at 2.75 current level and buying the April CME micro 2-year Treasury yield futures contract at a current level of 2.6. This represents selling that spread, the 2s versus 10s, at 15 basis points. A target for this trade could be the previous lows of negative 7 basis points, and a stop could be placed above at 30 basis points. This trade could make $220 if your target is reached and risks $150 if you're stopped out of your level. Now, a reminder that the April contract goes off on April 29th, so this trade may need to be rolled into the May if it's kept beyond that point. Now, if a trader believes that the yield curve will steepen from here, perhaps on continued inflation concerns, they could buy the April CME micro 10-year Treasury yield futures contract at 2.75 and sell the April micro 2-year Treasury yield contract at 2.6. This would be buying the spread at 15 basis points. Now, a target for this trade could be the February congestion area of 50 basis points with a stop placed at negative 8. Now, this trade could make $350 if your target is reached and risks $230 if you're stopped out at your level.